Alright, hi guys, it's Pete here. So let's go through a market update once again. Today is the 23rd of February. Now, I usually do this about once or twice a month, but now I'm doing this on a kind of an ad hoc basis because it depends on how the market moves, right? And yesterday we saw a huge movement in the market, and let's just bring everything into context, right? Bring it together to understand, are we in the market correction or what's going on? Okay, so let's go into it. So before we go into the individual charts and market, let's just look at the sentiment. All right, sentiment is very important for those of you who are new. We never see a bear market when the sentiment is very bearish. Neither do we have a bull market when the sentiment is all bullish. All right, it's always a bit of contrary here. So what we see right now here is the S&P 500 sentiment. This is by the IG index, okay, and you can see we are right smack in the middle. Although there has been a bit of increase in the past few weeks, all right, so therefore there are more bull people in the market, so that's why I write here more bullish, right, and we want to be more careful because you can see this chart is quite useful. Why? Because as the bullish amount starts to decrease, you see the chart starts to increase. And what I like right now is that we are not getting super high bullish sentiment like what we saw previously in January. Okay, so the next one we're going to look at is the Fear and Greed Index. This is by CNN. And you can see right now, although we are greedy still, but we are not in the extreme region like here. Okay, like what we saw back in December and November period, this period, right? We actually saw that we were at 80, 90. Okay, so overall, sentiment wise is still pretty neutral, slightly more bullish on the end. So just be more careful when you invest, okay? Next thing is let's look at the American Individual Investors Index. They call it the AAII. And you know, I've been talking about it being relatively low when I talk about it in early February here. So it was 37. And right now, we are at 47. Okay, so this is a bit higher than I like because previously this was actually lower than historical average, which to me is that it is not too bullish. But right now we are definitely in the bullish region. Okay, so guys, just take note that now the market is a bit frothy and it changes very fast. You can see that it went up by 10%, almost 10% in just a matter of 2 weeks. Okay, at the same time, the amount of bearish sentiment has dropped down. Okay, let me just change the color here. Okay, the bearish sentiment has dropped down to about 25% only, all right, as compared to the average. So right now the market is definitely more bullish. So therefore, if you're entering trades, just be aware, right? You don't want to be bullish when everybody is bullish. When everyone is bullish, you should be careful, you should be tapering back. And this is what I talked about to many of you, right? I'm trying to raise a bit of cash, raising it to about 20-25% if I can, okay? So let's look at the US economy reports, right, as an outlook for now. First one, let's look at the US composite PMI that just came out and in 18 February, right? So overall, let's just put it into a very summarized version. Overall is great, okay? Overall, we went up to 58.8, which was even better, all right? February is even better, slightly better than January, okay? And we are at a 71-month high, right? Production is ongoing, service activity is also high, manufacturing is also great, although it's not as high as January, but it's only a 2-month low, so I won't be too concerned. Later we'll look at more manufacturing output, okay? So you can see that overall the composite PMI has been increasing and this is generally good news, alright? Next one, this is the business inventory that just came out on 17th February, alright? Overall, we are healthy, we are up by 0.6%, alright? $1,971 billion, okay? This is significantly more than what we saw in November, and these are December figures. So guys, take note that whatever we see for business inventory in February was already in December. Okay, they don't report as timely. Now, the key thing is this: while we see that the business inventory stays flat, we want to know, is it because there is not enough inventory or the sales is actually catching up? Okay, so it's important to read the footnotes, the details. And here it says, right, sales is trending up by 0.8% as compared to November. But if you compare 1 year ago, it's actually a whopping 2.5% higher. So that's very, very good because this is actually pre-COVID. That means right now, our sales figure for trade is actually better than before COVID. Okay, whereas inventory, in fact, inventory has already reduced. So this is, once again, what I talk about as business are trying to catch up with demand. So overall, inventory divided by sales, we are actually slightly lower at 1.32 as compared to 1 year ago in 2019. 1.39. Okay, so next one. Next one we talk about retail and food. So just now was more of businesses. Now we're looking at consumption. Okay, and to be very frank, I did not expect this. This really blew it out of the water because previously we saw consumption has been relatively flat. All right, not much going on. But boom, January, everybody came out to play, right? Came out to spend, and we saw a 5.3% increase in monthly sales in both the retail and the food sector. Okay, now last time it was pretty much propped up by auto sales, but this time round, even as we don't look at auto sales, look at the white one, it says excluding auto sales, it's actually much higher. Okay, so that is once again another good news. Okay, so how about wholesale trade? That means business to business trading to each other. Still good news, although not a big difference. All right, plus 0.3%, standing at $651 billion. Okay, so we'll look out for the next release in 8 March. But right now it is still healthy because when we look at sales, once again, you want to look at, is it because sales is improving or actually inventory is weakening? Okay, and we want sales improvement all the time. So right now we are seeing sales up by 1.2% as compared to November. Once again, this is December 2020. And compared to year on year, it is up 1.7%. Okay, fantastic. Whereas overall inventory is down 1.6%. Okay, and nothing much to compare year on year, is revised up by 0.1% up to 0.3%. So guys, so overall you can see, right, for business to business, interestingly, we are seeing both phenomena. Sales is improving, at the same time inventory is down. So once again, businesses are playing catch up, trying to fulfill demand. Okay, trying to fulfill demand, and that's why we see that the inventory to sales ratio for overall wholesale trade is at 1.29 as compared to 1.34. Okay, so that is US outlook on the whole. Let's look at global. All right, because if US is the only one that's recovering and the whole world is not improving, what use is that? Okay, and I just want to say that overall here I'm focusing more on Europe, Asia, not so much in Latin America and Africa. Okay, so if those numbers, guys, you find it important, let me know. But generally, I don't find those figures very significant yet. Okay, so first one, let's look at EU. EU, this one just came out as well. All right, so for February, their PMI, all right, manufacturing index is at 48.1. Once again, still not above the 50 mark that we want, but nonetheless, it is improving. Previously, it was above 50, but it dropped back down for a moment. Okay, so you can see composite is at 48.1. However, take a look. Why is it at 48.1? It's not because overall is low. In fact, manufacturing is at 57.5. It is higher. Okay, it is higher. And in fact, if you look at the manufacturing PMI overall is at 57.7. So the only one that went down is actually services, which is expected, right? COVID kind of hit a lot of the travel, hotel, service industry in general. But even in Europe, the manufacturing sector is raving, is coming up. Okay, so other than Europe, let's look at Asia. There's not much outlook for Asia right now because the reports are not out yet. We'll have to wait for another few weeks. However, we saw that in the January industry PMI for Asia, I just want to make you all understand, right? Why is manufacturing booming and which sector? Okay, and you can see which are the sectors that are suffering first. Once again, consumer services, banks, all right, transportation, pharmaceutical. Interestingly, is suffering. I don't know how they calculate this, but interestingly, the one that went up a lot is what? Automobiles, right? Mobility. People are starting to do business. People are traveling more within country. People need to get to places. So automobile has been going up. Household expenditure has been going up. Machinery, mining, chemicals, real estate. So I love the Asia outlook. These are all strong supporting and manufacturing industry. Okay, so in Asia, what are the few big countries that we look out for? Firstly, India. India is currently above 55 points even for PMI. All right, that is very healthy. In fact, I'm a bit worried for India in this case. Why? Because their highest used to be like 58, 57. So right now they are quite close at the highest point. So hopefully they can maintain this trajectory. All right. The next one is South Korea. South Korea really coming out from a very, very low point. In fact, it overshoot the previous highs. Okay, so that's great. South Korea is one of the big manufacturing houses in Asia. Okay, so this speaks very well for Asia overall. But nevertheless, the US market very much pin their results and their hopes on this thing called employment. So let's take a quick look. Okay, so US employment, to be honest, nothing much. Two things that we usually track. One is initial claims, that means how many people file for unemployment the first time. Okay, and you can see that overall is quite flat. There's no increase, neither there's any decrease. So that is not the best thing to have. We will wish for it to go down as low as the previous low. Okay, but good that it's not going up. The next one, unemployment rate. Okay, unemployment rate right now continue to drop at 6.3% right now. Okay, previously it was even lower at about 3%. So we really want that to get down to where it was. It's still twice as higher as previous. So once again, I always say this is the red herring, right? No matter how the economy is improving, we're still seeing higher than expected unemployment rate going forward. Okay, but if the economy goes on as it should, we should see this number gradually come down and really a shift of business sector, people who are in the service sector moving more towards manufacturing. Okay. Now, another red herring is that we have been consistently since August seeing the increase in the Treasury 10-year bond. Alright, the 10-year yield has been increasing. Right now it's close to about 1.5% for 10-year Treasury. And this is worrying for the stock market. Why? Because a lot of times when the Treasury yield can give you a much better return, then you don't want to invest in riskier assets such as the stock market. Okay, so usually we want this to be low. However, at 1.5%, it is still relatively low compared to pre-COVID. So I'm not too concerned, but definitely keep an eye on this to make sure that when it goes really, really high, then you want to be tapering back on your investment even more. Okay, so after that, we want to look at volatility. Now, volatility is super critical because volatility tells you how many people are hedging the market, how many people are fearful, and if this thing spikes up really fast, you will expect the market to correct really swiftly. Okay, so give you a quick overview. This is the volatility chart. This is VIX. You can actually find this on TradingView yourself. And you can see that every time when we have all these spikes is when we see the market had a very big correction, right? Remember the November, September period, and then we saw a little dip in the January. Later we'll look at the S&P, yeah? So since then, it has come down a lot. In fact, it went back all the way down to the support level around 20 over here. And right now, we are at about 23. So I'm not too concerned yet, but should this figure have another upward leg like this, okay, then I'll be concerned. And by the way, just look at it from a technical perspective. Alright, it looks very positive for the VIX to go up. Why? Look at the MACD is pink, and here we are oversold. Right? Previously, when we had a little bit of pink, oversold, shot up. Right? Here, pink, oversold. It didn't go up immediately, but soon enough. Right? Once again, oversold, pink, oversold, pink. So all these are what we call warning signs that the market is telling you, hey, maybe you want to take some chip off the table. Right? So for those of you who are very heavily invested, if you cannot withstand the volatility, you might want to trim back on the market a bit. Okay? Alright, so it is still low, but it's slightly rising. Okay, so with that done, guys, let's look at the charts. Okay? Alright guys, so right now we are here at the charts. Let's look at the S&P 500. So yesterday, S&P 500 fell 0.77%. Okay, so as always, zoom out, take an overall perspective look at this. Okay, we are still very, very healthy. In fact, if you were to just draw a very long-term resistance line, okay, all right, we are still way above this line, which already turned into a support line, by the way. Okay, going to 1 year, have a look, right? Okay, right now we are here, we are finding nice support at the 20 moving average. We want to see whether it bounces off. Once again, guys, you can see that this is a very repetitive feature of the S&P 500. It will always come back down to some kind of support level. In fact, it came down to a very nice 50 moving average. Those of you who took opportunity here, all right, even with the recent drop, nothing to fear, right? And yeah, so right now we want to see how far it drops below. Will it again go back down to the 50 moving average? I will not be surprised if it does. Okay, if it does, hey, that's great opportunity for us. Okay. So that's for S&P 500. Let's look at the Nasdaq. Okay, Nasdaq, of course, as the tech-heavy industry, it fell the most yesterday. All right, Nasdaq fell over 2.63%. All right, but once again, you can see Nasdaq very nicely bouncing off a nice support. In fact, it is closer to the 50 moving average as compared to your S&P 500. So, want to see whether it gets back there. In fact, you can see for Nasdaq, the stochastic is not very reliable. It hasn't gone back to oversold. But if we were to see an oversold situation, let me bring this up. If I were to see an oversold situation right here, okay, as compared and together with the pink, okay, if it happens again, guess what? I'm gonna go in big. Okay, because this is a very, very strong sign. All right. So with that done, interestingly, Dow Jones, not the DJI. Dow Jones went up slightly. Okay. All right. You can see my old notes here that says the vaccine. Okay. All right. Dow Jones went up slightly at about 0.09%. All right. But Dow Jones also having a bit of overbought and potentially going down kind of situation happening here. Alright, back support level should be around 50 moving average as we saw previously here. Okay, alright, so this is the Dow Jones. Now, of course, not just looking at US overall, let's look at Hong Kong, one of the important indices in Asia. Alright, so Hong Kong actually very, very strong, right? Came down and on a very, very poor trend and then it broke out, alright, since October, and right now potentially finding support at the 20 moving average. So let's see if that happens. All right, and let's look at CSI 300. Now CSI 300 is more of a composite index for Shanghai, already at support. Okay, so very, very strong. So guys, the thing is this, yesterday what we saw is like a global sell-off. So overall, I think there's nothing to be too worried. It is a very normal phenomenon for things to drop back down when they've been climbing a long way. Okay, in fact, they always say, right, a bull market climbs on a wall of worries, and this is exactly what we want to see. Right. So before I go, just to show maybe another asset class, BTC. Some of you have been asking me about Bitcoin. Okay, so let's just take the Coinbase one. Okay, so Bitcoin has been on the upward trend. All right, very, very nicely, always finding very good support either at the 20 or the 50. So I would not be surprised if BTC come down to retest the 40k mark, but I think very likely it will stay above the 20 moving average, which is around $48,000 to $49,000. Okay, now this is a very important mark. Why? Because it's coincides with a previous high, which is serving as a support. Plus, here we see there's a bit of 50 moving average support. Now, looking at other indicators, you can see that for MACD, it is not at the best situation. In fact, we can see a weakening, and stochastic has always been overbought. But you know, right now it is finally coming down. So we do expect this to drop back down, okay, to hit the 20 moving average. All right. Let's look at RSI for a moment. Okay, let's look at RSI for a moment. And RSI indeed shows overbought and now it's coming back down. So for those of you who have been waiting for this moment, like what I do is I just set GTC order at various price line. So I set it at 50, I set it at 48, I even set it at 47, and my lowest I think is right here at 40. Okay, so for those of you who are investing in different asset classes, just bear in mind that they need to weigh your portfolio sizing. Always make sure that you are in stocks and your other asset class in the correct portfolio position. Alright, if you have any questions about portfolio, do contact your mentors, alright, and ask them how should you shape your portfolio and prepare yourself for the next leg up in the market. Okay, so this is a relatively long session. Alright, if you stay here with me, congratulations. Please go back, sort out your portfolio, alright, and I'll see you guys next time.